Welcome to the FedLife podcast with Dan Sipe from Serving Those Who Serve. In this podcast, Dan draws from years of financial experience to help federal employees overcome challenges that every Fed can relate to. Join us for this journey as we reach, teach, and serve to help you make the right financial decisions. Now, on to the show.
And hello and welcome to this episode of the FedLife podcast. As always, I'm your host, Dan Sipe. Additionally, I'm the branch manager here at Lee Sipe and Associates and Serving Those Who Serve. I want to begin, as I always do, by saying thank you for your service. You don't hear it enough. You'll always hear it here. And with everything we're going through right now, we need you Feds more than we ever have. So I appreciate that you're staying on the job for us and holding everything together. We're back once again today with the incomparable Ed Zurndorfer, or as we affectionately call him, the Guru, as part of our ongoing mission to reach, teach, and serve you. Now, at the outset, as I always do, I have to say this. I need to say the opinions of our guest, Ed Zurndorfer, are not the opinions of Raymond James or Lee Sipe and Associates, Serving Those Who Serve. This podcast is presented for information only and not intended to be taken as advice. All listeners should consult their personal advisors before taking any action. As always, these podcasts mirror Ed's Fed Zone articles. He writes for us every single week, and sometimes with some extra ones, on our website in the Fed Zone. That's free to you. It's fed-zone.com. Be sure to share that with your friends because it's becoming a great resource. We had a couple of outside organizations take a look at what we do, and they really were blown away by the quality of the content that we have there. So share it with your friends, and they will thank you for it. This episode will follow up on their last one because we are in open season. It is that time of year again. Now, I'm going to throw a little curveball here and say, folks, the time to think about open season is before open season. So we're going to cover a lot of stuff here. Ed has a webinar that we do multiple times a year on FEHB, which is a big part of open season decisions. You're able to ask live questions for it. Go to our website, stwserve.com, click the red button for webinars, and check it out. I think you're going to find it to be very, very helpful. If by chance you get around to listening to this after open season has passed, do not worry. You will have the opportunity to learn and be prepared for the next one. We're going to do, as we did the last go-around, have kind of a blended approach here. So we slimmed down the podcast a little bit because Ed writes some really comprehensive articles. And a lot of times they have links in them and that sort of thing. So the feedback that we've gotten is that people aren't able to stop and figure out where the link is. So we're going to guide you back to the website, to those articles, and you'll hear us refer to them. So Ed, on our last podcast, we talked health plan choices for the 2021 year. And your first article this month offers some guidance on that. You begin with a premise that I really agree with, that folks have a challenge on how to pick the best plan for them. And you jump in with some parameters. Let's list them, and you can give a quick definition. Well, actually, I'll run through them. You have premiums, deductible, co-payments, co-insurance, network, and finally coverage. So why don't you talk a little bit about that for our folks?
I agree with the premise that it's a challenge to pick the right health insurance plan, whether you work for the federal government, you work for a private company, or you're just trying to pick an individual health plan. It is a challenge. And one thing I mentioned to employees and other individuals looking for health insurance, you can't just look at premium costs. Just because a plan is cheaper than another plan doesn't mean it's a better plan. So I want to go through some of the parameters that you need to look at in choosing a plan. These are some of the basic things. The first thing is premium, and basically that's what you're paying for the plan. That's what you're paying for the plan, and let's not lose sight of what health insurance, like any other insurance, is. You are paying a relatively small amount of money called premiums in order to protect yourself against a financial catastrophe. That is the purpose of insurance. It's a transfer of risk. The premiums that you pay allow you to be insured, but just because you have cheaper premiums, you're paying cheaper premiums, does not mean that you have better coverage given your needs. So some of the other parameters you need to look at in choosing a plan is, what is the deductible? The deductible means the amount of expenses that you, the insured, have to pay before the policy will start paying for any expenses that you have. These are typically, the deductible is in a dollar amount. It can range from anywhere from, let's say, $100 to as much as maybe $3,000 or $4,000. In general, the higher the deductible, the less premium you have to pay. Mm-hmm. But again, like I say, do not be misled. That's the deductible. Some other parameters you look at are co-payments. Usually it's a flat amount a dollar amount that you have to pay when you incur any expenses, such as you have a visit to the doctor or to the hospital. You have to pay a certain dollar amount of the cost that the insurance company is not paying. Then we have co-insurance. That represents the insurance portion of the bill. That's typically a percentage of the bill that the insured has to pay of the bill. For example, 10%, 15% of the bill that the insurance company is not going to be paying. Network. This is the healthcare provider and facilities that accept that your insurance. I always point out to federal employees when they're trying to choose a plan, if they have favorite doctors they want to go to, preferred doctors, they like these doctors, and they're insured, and they are thinking about choosing a particular health insurance plan, it really helps before you enroll in the plan that you check with the doctors or clinics or the hospital that you would prefer to go to if you have to go to the hospital, that they accept the insurance that you want to enroll in. And it's not only a plan that you are thinking about getting into, but even an existing plan. Those federal employees who are satisfied with their health insurance plan that they're in 2020, if they want to stay in that plan, that's fine. But if they are in what's called a preferred provider plan, a PPO, preferred provider organization plan, it really helps now to check with their doctors that their doctors will stay in the network. Not all doctors, stay in the plan from year to year. You need to check this. If you want to save some money and you're enrolled in a preferred provider organization and your doctor's in the network, yes, you will save money generally. However, the doctors may choose not to be part of the network in 2021, so you need to check. And then we have coverage. That's the care covered by the policy. What expenses are covered by the policy? Some services must be covered by law, and I'll give you an example. Preventive care. Under the Affordable Care Act, and yes, the Affordable Care Act is still law. The United States it's not been dropped yet, but it's still the law of the land, that the federal health insurance plans that abide by the rules of the Affordable Care Act have to provide, each of the plans has to allow enrollees to get preventive care, well visits for yourself, for your members of your family. And the good news is that the well visits will be covered without having to reach your deductible. In other words, it's called first dollar coverage, Dan. That when you go get your well visit for the year, you don't have to have reached the deductible first before the plan will start paying for your visit. That's very important to know. There's other aspects to coverage, what the plan will cover and how much, what percentage of the expenses will be covered, how many days if you have to go to a clinic, something like that, then you have to stay overnight, let's say inpatient care, how many days will be covered. It's all written in the brochure. And that for most people, that's the toughest thing. When you read the plan brochure, you got to do all this stuff to understand all the parameters of the plan. So that's basically a rundown of the items associated with health insurance plans.
Sure. Now, one of the things that we've touched on before, and you touch on in your article, and it's probably good to go into a little bit here, you do bring up the topic of high deductible health plans and how they interface with healthcare savings accounts. Why don't you spend a little bit of time on that? Because I know that's a key provision in managing out-of-pocket expense.
Health savings account started about 15 years ago, and the idea behind the health savings account is that consumers should treat their medical expenses, their healthcare expenses, like they treat any other consumer expense. And what I mean by that, Dan, is the fact that, let's take, for example, you go out and shop for a car. You shop for a car. you're looking for the best price. You're looking for a good car. You want a good price. And you shop around. And the idea being that if someone can really find a plan that meets their needs, a health insurance plan that meets their needs, and they and be able to save some money somehow, some way, then in the long run it'll help everybody. Health insurance costs have gone up a lot in this country over the past 20 years, and one of the reasons is that people who have been insured do not hesitate to go to the doctor for the most minor items because they know their insurance will pay for most of it. Well, if individuals had the idea that, well, I'm not going to run to the doctor every time. If it's not if it's something that's not significant, if I can take medicine, over-the-counter medicine, without having to go to the doctor. This way, I won't waste time with the doctor. I know I'll be better if I take the medicine, and I'll save some money in the long run. The idea of the health savings account is that if you enroll in a high deductible health insurance plan, high deductible, and every year it's IRS defines what a high deductible health insurance plan is. What is the minimum amount to be high deductible? You're paying for a good portion, if not all of the expenses before you reach that deductible. You might have more of an incentive not to use that plan that much, or if you find alternative ways to take care of you, which are less expensive, in the long run, you'll be better off in the following sense. The money you're saving, you could set aside in an account that's going to grow tax-free from year to year, and then once you do have some significant expenses that the insurance plan is not going to pay, or if you want to pay for your deductibles, you want to pay for your co-payments, you want to pay for your co-insurance, you can use this account in which the money that you put in was on a tax preferential basis. The contributions you made to this health savings account resulted in current year tax savings, and the money coming out will be tax-free. Then you'll have the best of all worlds. You have an incentive to save for your medical, just like you have an incentive to save for your retirement. You have an incentive to save for your future medical expenses. So that's the basic idea behind an HSA. Enroll in a plan in which you have a high deductible. The money you're saving by paying for the expenses that before you reach your deductible for you and members of your family. And then saving some money in this HSA will in the long run help everybody. And the HSAs have gotten very popular over the last couple of years.
Gotcha. And couldn't agree with you more. There's so much flexibility to them. And as a matter of fact, folks, be sure to catch our next podcast because we're going to dive into that a little bit deeper. Ed, you also give a couple of really good links here, and I'm just going to refer people back to fed-zone.com. And it's Ed's article, Some Guidance and Suggestions for Choosing the Right FEHB Health Insurance Plan for 2021. Well, he gives you the OPM site, and it's literally, there's a ton of information here, folks. I would say it's A to Z, but it's actually A to U because United Healthcare is the last one. And you can compare it up to 3 plans at a time. It's a really good tool, but it's a lot. And Ed, I love that you did this. You share the link for Consumer Checkbook. This has been a fave tool of mine for probably 20 years. And I subscribe to it because as part of my practice, I'm talking to people all the time about these types of decisions. And it really provides a great matrix for evaluating them. That is in there too. So thank you. Next part, because you expand on this pretty eloquently, you mentioned about the preventive care, and it's covered from the first dollar. And so we really touched on that. But then you go into something that I think is really important and we don't talk about enough, and that's making smart lifestyle choices. As I read it, it's saying to me that mama's urgings to eat my vegetables and go out and play and get some exercise, probably good for the whole life. So why don't you talk about that a little bit?
Yes, Dan. Our friends at the Center for Disease Control, they're very busy now, obviously, because of the COVID. I guess before they got very busy with this, they were doing some study about chronic diseases. They found that chronic disease is responsible for 85% of the country's healthcare costs. Many of these chronic conditions are attributable to unhealthy lifestyles. Besides costing money for disease management, chronic conditions can result in expensive inpatient stays, which are not cheap.
Sure.
And I talk about some of the ways that one can reduce their chances of developing a chronic condition. For example, eating a balanced diet, staying active, avoiding risky behaviors. We have to understand that we are our own advocates when it comes to our health. You have control of what you eat. You have control of what you do every day in terms of exercise, in terms of smoking, not smoking, what you generally put in your body, and how you conduct your life. We have to be very sensitive to that, because in the end, if we're not taking care of ourselves, then you can have the best health insurance plan in the world. You're still going to be in a position of being potentially subject to the chronic disease thing. And I think over the last few years, I think we've gotten a little more sensitive to this. But it's very important that individuals, besides picking the health insurance plan, yes, that's important. But we have to look at our lifestyle to see, are we conducting ourselves the right way so that we won't have to use our health insurance.
Sure.
I wish people would consider their health insurance in many ways like auto insurance. Yes, we have to buy auto insurance because the state says we have to buy auto insurance. But people say, well, I have to pay those premiums, and darn it, I didn't have an accident this year. I just threw away a lot of money. Well, you didn't throw away a lot of money because there's the potential there that you may have an accident, may it not happen. The same thing with health insurance. Yes, you're paying a good amount in health insurance costs, but hopefully the premiums you pay, you won't get a return on your dollar because you don't want to go to the doctor. You don't want to go to the hospital. You want to stay healthy. But that responsibility is up to you.
Couldn't agree with you more.
You have to stay on top.
So, folks, by all means, read Ed, but thank Mom, too, because your mom's probably like my mom and told me to eat my vegetables and get enough sleep and get out of the house and run around. Okay, Ed, let's jump to the next tier because a lot of folks really care about this. I certainly do, especially when my kids were coming up. Dental and vision, so that means FEDVIP. So why don't you give us a flyover on that?
The federal employees and annuitants are eligible to join the federal employee dental vision insurance program, FEDVIP for short, FEDVIP. This program started on January 1st, 2007. It allows employees and annuitants to elect separate dental and or separate vision insurance coverage, and one must enroll in the program during the current open season. That's the only time you can join the program unless you're a new employee. Then when you're first hired, you got 60 days to join the program. As I say, it's a separate insurance besides your health insurance. The question comes up many times, am I eligible for the federal dental or federal vision insurance? And the answer is, if you're eligible to join the federal employees health insurance program, you are eligible to join the federal dental and vision insurance program. The key word here, Dan, is eligible. If you're not enrolled in the federal employees health insurance, that does not mean that you can't join the FEDVIP for short, but you're eligible. I know many employees who are not enrolled in the federal employees health insurance because either their spouse works in private and they got a better plan, or maybe they're retired members of the uniformed services and they're enrolled in TRICARE. TRICARE is the group health insurance plan for retired members of the uniformed services. Those individuals, if they're federal employees, can certainly join the FEDVIP. And there's no requirement. But the key is you're eligible. That's the key word here, Dan. Eligible to join the federal employees health insurance.
Gotcha.
Now, that's the good news. That's the good news. Now we're going to get to some bad news.
Okay.
Employees pay the entire annuitants pay the entire cost of premiums. There is no government contribution, unlike the Federal Employees Health Insurance, in which the government pays 72 to 75% of the health insurance premiums under the FEHB. Under FEDVIP, the federal government pays nothing. There's no government contribution to if an employee joins dental and or vision insurance.
Gotcha. That's sort of bad news, but if you have kids and do a lot of dental stuff, I think you can pretty quickly do okay in the balance there. You also, within your article, you have links. And here's what's interesting. It's FEDVIP, but the website is Benefeds.
Yeah, to enroll in the Federal Employees Dental Vision Insurance Program, or to change your plan, or to disenroll, you do it during the open season, you got to go to the website www.benefeds, BENEFEDS.com, benefeds.com. And that's where you get all the information about the plans for dental and as well as vision on that website.
And you mentioned that there's 7 international and national plans and 5 regional plans for dental and 5 international and national plans for vision, so not quite as broad as FEHB. You know, folks read your article, they click the link. What do you think about the site?
I think it's pretty comprehensive, but I just like to make a point. I mean, they do a good job for comparison. There's a comparison tool on the website there to compare the various dental and the various vision plans. I would like to make a point, though, that dental and vision insurance, like any other insurance, has to have a purpose. It has to have a purpose. What I mean by that is, if you really feel, if an individual feels that they're not going to have significant out-of-pocket dental expenses in a particular year for themselves and if applicable for members of their family, and the same thing with vision, why would somebody want to join the federal dental or the federal vision insurance plan, or for that
Great
matter,
point.
any other plan? Again,
Great point.
The idea of insurance, I said it before, is you're paying. It's transfer of risk. You're paying a relatively small amount of money, called premiums, to protect yourself against a financial catastrophe. This time of the year during the open season, if anybody's contemplating joining the federal dental or vision insurance plan, what they need to do is look back this past year and see if they incurred any significant dental or vision expenses, and look ahead to 2021 to see if they or members of their family expect to have any dental or vision expenses, anything significant that they feel they cannot afford to pay, and that's why they're going to get the insurance. If they're currently in a dental or vision insurance plan and they've now been through the worst, they got all their significant expenses paid through insurance, but don't expect such expenses in 2021, they should disenroll from the federal dental or vision. And you only do that during the open season. It's very important. I also want to point out that most federal health insurance plans, the FEHB, offer some dental coverage, the basics, the cleanings. You go to the dentist for cleanings. I'm a federal retiree, and I'm enrolled in the Federal Employees Health Insurance, and my plan will pay up to 2 for dental for up to 2 cleanings a year, and maybe occasional filling. Nothing extravagant in terms of expenses, but the point is, thank God, I have good teeth. I take care of my teeth. Again, what we said earlier, it's a smart lifestyle. But the idea being, it's not worth for me to enroll in a separate dental insurance plan because I don't have the significant expenses. So
Gotcha.
Therefore, I have not enrolled in the dental insurance plan. I also want to point out that those employees who are close to retirement, that you do not have to be a participant in the federal dental and or vision insurance program for the last 5 years of your federal service in order to be eligible to get this coverage during retirement. There's no 5-year rule like there is for the federal employees' health insurance. In order to keep your federal employees' health insurance in retirement, you must be a participant in the federal employees' health insurance program for at least all of the last 5 years of your federal service, ending on the day you retire. There is no such requirement when it comes to the dental and vision insurance program. Yeah, I'll give you an example. I mean, I never was able to join a dental or vision insurance plan when I was in federal service because I retired before it came out. I retired back in 2006. It came out in 2007.
Gotcha.
If I wanted to join a dental and or vision insurance plan, now that I'm retired, I could during the open season. It just happens to be I don't need to. But in case I would, suppose my dentist says, well, no, next year is going to be an expensive year, Ed. You're going to need some crowns, some bridges. Maybe you ought to think about getting some insurance for next year. Well, I would do it during the open season. So
Absolutely.
The bottom line is that everybody has to look at their situation before they jump into buying the separate insurance. I also want to point out that as far as employees are concerned, and even retirees, there are ways to pay what I call self-insure. We talked about the HSAs, the health savings account. You can pull money out of your health savings account to pay for any out-of-pocket dental or vision expenses. You don't have to buy separate dental insurance. You actually can use your HSA. Those employees who do not have an HSA, we're going to be talking about the flexible spending accounts, the healthcare FSA. They can pull money out of that to pay for out-of-pocket dental and vision expenses. So there are ways, what I call, to self-insure.
Those are great tips, and actually that's a great segue. It's a good place to break. To sort of wrap up this episode, folks, stand by for next podcast on the open season topic, because Ed is going to decode and demystify HSAs, HRAs, and FSAs. All the stuff where you can put money on a pre-tax basis and use it to pay out-of-pocket expenses, dental work that might not be covered, that sort of thing. But most importantly, you have the ability to lower your healthcare costs by paying them with some of Uncle Sam's money or pre-tax. Ed, I say this every time. I don't know how you do it. Keep up with all this stuff, and I'm glad you do it with us on behalf of our feds. Folks, that is a wrap. But Ed will be back as we continue to work together to reach, teach, and serve you. We are serving those who serve. So please be sure to subscribe to this podcast on the YouTube channel and Spotify, and share this with a neighbor, share this with a friend. Even if they don't want to listen to the whole thing, it's going to point them back to the website. Share the website. We are seeing the numbers going up on people coming from all over the country, because what we're really trying to do is get the information that you need that is timely and accurate, and have that on the site for you. And we're going to keep doing that, right, Ed?
Absolutely.
So check us out on Twitter and LinkedIn. Do not forget the live webinars every week. Actually have virtual Ed Zurndorfer live. You don't have to go anywhere. The guru will come to you. It's Live with Ed as we reach you where you are, teach you where you are, and above all, serve you where you are. So that can be in your home on your bunny slippers. We're ready to go, come in to help you there. Share that information with your friends. Sign up for those webinars. They will thank you. You'll be happy you did. Be sure to read every month in the Fed Zone at fed-zone.com. For Ed, the crew at Serving Those Who Serve, and me, Dan Sipe, good luck, Godspeed, and above all, and Jen Meyer and Wes Battle, I know you're stealing this when you do webinars, but it's my line. It's your FedLife. Please make it a great one, because you deserve it. Stay well, everybody.
Thank you for listening to the FedLife podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Serving Those Who Serve or Raymond James. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services Incorporated, member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services.
Raymond James is not affiliated with and does not endorse the opinions or services of the quoted professionals or their respective organizations. Raymond James is not affiliated and does not endorse the opinions or services of any of the quoted professionals or their respective firms. Any opinions are those of Dan Sipe and not necessarily those of RJFS or Raymond James. This case study is for illustrative purposes only. Individual cases will vary.